Property experts are saying now is the time to buy. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee, because apparently now is the time to buy property, according to experts on an article from Yahoo Finance. Now just think about that. We've just had a 7% hit to GDP. We've entered a recession in the most dramatic fashion since the Great Depression. Unemployment is higher than it's been in living memory. Underemployment and unemployment is very high. You've got entire industries that are shut down. You've got borders to states that are locked down. You've got businesses that are barely surviving in zombie mode thanks to government handouts. You've got an artificial increase to welfare payments stimulating the economy. You have businesses able to trade while insolvent. The rules have been shifted. The goalposts moved. You've got mortgage holidays in place until March. You have investors giving discounts of up to 15% to get out of apartments in Sydney. You've got rents falling everywhere. The number of listings in Melbourne in some areas is over 100%. And yet now is the time to buy. So let's have a look, and I'm going to have a shot of coffee so you can all regain your composure for this, because we're going to need it. Now is the time to buy. So now is the time to buy. Property experts warn. Property experts. It's a rent warning, everyone. A rent warning. Uh-oh. Oh, no. Australians in all capital cities, bar Sydney and Melbourne, okay, would be better off buying a home than renting it, new data has revealed. So, Australians in every market, rather than the two biggest ones that make up the property market, would be better off buying. We can see here, look at property price growth. If we look at, well, house values, well, there's a little difference there. Look at the median value in Sydney is 866 grand. And then Melbourne, 678 grand. Keep hitting the microphone. We got Brisbane at 500. Then it just goes below there, except for Canberra at 641. So a $500,000 mortgage is quite affordable compared to 866. So of course you'd be better off renting or better off buying. But then again, rents are coming down. Is this just another FOMO piece, or is it a paid piece, a paid article? Let me know in the comments. According to Pete Wargand, co-founder of online buyers agency marketplace buyersbuyers.com.au, it's more compelling to purchase rather than rent a home in most states for Aussies with access to a deposit and a reasonable level of employment security. I mean, so this is the... How is he an expert? That there's no expertise in that advice. There's no expertise in that advice. If he's basing it off historical precedent where property has, yes, it has gone up. If we look at the past, and I've lost that bloody chart I just brought up. If we look at the past here, you can see, yes, it would have been smarter to buy than rent over that time period. But what if we get a huge correction now? Would it be smart to buy now, or would it be smarter to wait a little bit? And, of course, if you have a deposit and job security, then yes. But are you going to be able to get the finance? Is it smart for someone in South Australia with a 3% deposit and government handouts and loans out the wazoo to jump into property they can barely afford? Apparently people can even get it on JobKeeper or government assistance. So in many areas, rent money is dead money. Okay, that is the old line. But it's not really true, is it? You know, Australia, we have this obsession here with property. We have this obsession here with property, that your home is an investment. In other parts of the world, they really don't have that. It's different. They don't see a home as a way to grow equity, or the growth isn't really worth it. It's about security and permanence and stability. But rent money is dead money. I don't know. If you're paying a significant amount of money for a house, maybe it's not. Maybe it's cheaper to rent. Maybe it's smarter to rent than invest that money into other means. What's the opportunity cost of paying additional off your mortgage? Now, if you can get a mortgage that's cheaper, payments are cheaper than paying rent in the same area, then maybe, yes, maybe it's smart to do it. you know, the old rent money, it's dead money. I think that mantra needs to disappear. That's a marketing spiel that a lot of us have fallen for. So added risk-wise CEO Doran Peleg. When it comes to houses, the preferred dwelling option in most areas of the country, in many cases it is cheaper to buy than rent. If you buy a house, you can start building equity straight away, or you can start losing equity. You can be in negative equity. That can happen, everyone. We just don't think it can because we've got a normalcy bias. Because for so long, property has just been as good as gold. It's been as good as houses. Everything's gone into property. I mean, think about it. We now have the major banks predicting a 15% fall. In the article I looked at the other day, I was quite excited that people had paid off significant amounts of credit cards. Although John Adams gave me a call and said, yeah, it's probably, he ruined my joy because he's looking at how much of it is going to, alternatives like Afterpay and Zip and that. I said, don't ruin my good news piece. But here's the thing. I've lost my train of thought now. If we get that 15% hit in that article that the bankers were talking about, and there are others even predicting higher falls to property, will you be building equity? Would it be smarter to wait another 6 months for the market to correct? For all these mechanisms that are in place to prop it up, the mortgage holidays, the job keepers, the trading while insolvents, where all of these things were to finally run out, then would it be the time to look at the market? Or maybe just before? Or maybe when you start seeing forced sales advertised? Maybe you can get a bargain then from an investor that's desperate. Who was that, that genius who bought 5 properties, negative geared them all and was struggling? Maybe you get a good bargain from him, offer him 30% off cash. So it's not necessarily true. Anyway, particularly when you're taking a long-term strategic view, and if you're in a good position to negotiate well and buy grade A property that will serve your family for many years to come. So, here's the thing. There's a whole lot of limitations on this one here. A whole lot of limitations or restrictions or asterisks to their comments. A lot of people aren't going to do this. Rentwise research found that interest-only repayments for owner-occupiers and investors are lower than the annual rental cost in most areas. What's more, in all states and territories except for Sydney and Melbourne, even the principal and interest repayments are lower than the annual rent. That's assuming you have a 20% deposit. Well, rent's falling. Rents are falling. We've already seen them falling. This data's out of date. In Sydney, annual rent on the median house price cost nearly $30,000. That's $4,466 more than it costs to pay the interest-only repayments. However, it costs $12,514 more to service the principal and interest payments, with renting the more affordable option. In Adelaide, however, annual rent on the median house price is around $20,000. That's nearly $10,000 more than it costs to pay the interest-only repayments and $1,567 more than it costs to service principal and interest repayments. But what about the maintenance costs? What about your rates? You've got your rates, you've got your water bills, you've got your power bills, you've got your maintenance costs. You're meant to put 5% of the value aside every year for the house for your maintenance costs. Or you got to do it yourself. Even that's going to be a big chunk. Trust me, after I'm recording this video, I'm going and painting some walls. That's my afternoon job here. Painting Queensland weatherboards. It's all fun. You'd hate to be in one of those old stone houses in Adelaide because then you need an expert, a stonemason, to patch that up. Or you can really do a whole lot of damage. But that hasn't been mentioned, hasn't been factored into this. And what about the opportunity cost of taking that 10 grand and investing in another asset? It's the same case in Perth, Hobart, Darwin, Canberra and Brisbane, where annual rent is thousands more expensive than servicing principal and interest payments on a mortgage. This entire piece misses all of the other expenses and the potential opportunity cost of putting the money into a mortgage as opposed to another investment. It's no surprise it's become more affordable to buy property than rent, given interest rates are at a record low of 0.25. And that's artificially low. It's not the cash rates now aren't natural. Ultra low interest rates means some lenders have even begun to offer introductory variable home loan rates of 1.99%. And we've already seen their first fixed rate of less than 2%. But this is only temporary, with RiskWise Chief Peleg warning, if you're a first home buyer, now is the time to buy. What? The current slowdown in the property market is only temporary, with houses in popular areas likely to experience solid capital growth in the medium to long term, he said. Once the COVID-19 issue fades, most likely in 2021, the traditional connection between low interest rates and an increase in dwelling prices is likely to reassert itself. Well, what do you think, everyone? Do you really think now is the time to buy, or perhaps wait until 2021 to see what happens, or the actual ramifications of this recession start to get felt? As always, thanks for watching. Let me know your thoughts and opinions in the comments below. Like, share, and subscribe to the channel. If you're a fan and want to support the content I created, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, and I'll see you next time.